Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And welcome in once again to another episode of Market Talk here for this Friday, June 11th. Great to have you with us. I'm your host, Jesse Allen. Find us online, the all-new markettalkag.com. We got great market and ag news information there, as well as all of our streaming sources. You could find us, subscribe, whether you're on Spotify, Apple Podcasts, iHeartRadio, whatever you're listening to us on. Subscribe, give us a follow, give us a review, a like, so we can see your comments and see you loving the show. Hopefully that is the case. And, of course, you can find all of our streaming sources, YouTube channel, radio affiliates, and more online, markettalkag.com. Well, today's guest, Ted Seifried with Zaner Ag Hedge, joining us. You can find him on Twitter at the Ted Spread. We had some technical issues recording the show, so a little bit of a shorter program today, but we do have more coming up on the show after we get to these comments with Ted Seifried as we looked at the market trade for Friday, and Ted had some interesting thoughts about the WASDE report, what we saw on Friday's trade with the selling, pressure, and more. Here's our comments for today's show with Ted Seifried. Ted, great to have you back on the show, my friend. It's been a little while, but always a pleasure to have you on, Ted.
Yeah, man. Happy to be here. Thanks for having me, Jesse.
Ted, let's dive right in and talk about this market trade Friday, some lower action. Got a few things to talk about. Now, the weather story has been the big one. We know there's been some rains moving through the northern plains here overnight into Friday morning. Some of that kind of breaking up. But before we get to that weather story, it seems to me there's some other factors we're kind of looking at as well here in Friday's trade. Maybe some profit taking in the grains, some liquidation, some funds getting out of some long positions. And of course, this is coming the day after a WASDE report. So I think to back up, what are your thoughts on that WASDE report that we saw yesterday? I know not many changes, but there were a few things of note in there.
Yeah, there really were. And it was all coming in old crop. And I got to say, I'm a little surprised the USDA did as much as they did, especially on old crop corn, with the quarterly grain stocks coming at the end of the month. Now, I think the changes that they made in both ethanol and exports were definitely legitimate. Like they really were going to need to do that. I just kind of thought they'd wait till next month, because what the USDA doesn't like to do is lower carryover by 150 million bushels like they did yesterday, and then get a quarterly grain stocks report that says, oh, but feed and residual should be higher, so we're going to have to offset that by raising it raising the ending stocks by another 100 million bushels on the next report. They don't like to flip-flop like that, but they must have felt pretty comfortable that was not going to happen. So I was happy to see it. Finally, the USDA old crop corn balance sheet is reflecting what spreads and what basis and what the board really has been saying for weeks, months now. This has been a much tighter corn situation than what we were really even thinking even just a few months ago. So that's really good to see. The July corn really responded very well to that at first, but then kind of gave back some of those gains towards the end of the day as we were under pressure in the July soybeans. I think there were some good moves by the USDA. Also, though, kind of surprised they didn't do anything on new crop balance sheet at all, in particular on exports, because, this is the first report that we've seen since that flurry of Chinese buying that 11 million metric tons that they had bought, which actually was, started right before the last WASDE report, but they don't do those numbers, the day of the report. They do them a few weeks or 2 weeks prior. So, for the fact that they didn't raise new crop exports for corn was a little bit of a head scratcher. I think some people are a little bit disappointed by that. Is that the USDA saying that, okay, we've already factored in this 11 million metric tons of corn sold to China? Or is that the USDA saying, well, that's a bigger number to China than what we were thinking, but it's going to take away from exports to other countries, and we're just going to stay with our current export figure for next year? Either way, a bit of a curiosity, but it is a long, long time before the end of next marketing year. There's still time for them to make changes there. maybe they just figured, okay, well, we're going to wait on that for now until we see more. So that's okay. Now, the July soybeans was the big disappointment. However, if you've been watching July soybeans trade for the past few weeks, you've seen the weakness. You knew there was something up with the old crop soybeans. The market basis was telling us we've got more beans out there or less demand out there or something, but it's not this, oh, we're running out of soybeans scenario. It's still a very tight balance sheet, don't get me wrong. And we still could run out of soybeans between now and the end of the marketing year. But it's not, 80 million bushel tight. It's not pipeline tight. It's actually gone the other way. At 135 million bushel, again, it's a tight balance sheet, but it's not scrambling to find every last little bit of soybeans out there, from the processors. And the crush number coming down 15 million bushel, I think it needed to happen. But that's something that the market gets really touchy about. That crush number, we kind of had in our heads that's just number never goes down. It only goes higher, And so to see that come down a little bit, it's a little bit concerning. And they said that it's because of soybean meal imports, which is interesting. I'm imagining that means soybean meal coming from Argentina to the Eastern Seaboard. So I don't expect that to really snowball or continue in a very big way. I think that was sort of a rip the Band-Aid off. I don't really feel like the old crop soybean carryover is going to get much bigger than that 135 million bushel. So at this point, we might have factored all of that into the market. I don't think that July needs to really fall apart much more than it has. But, again, we finally saw it on paper from the USDA at this point. So the knee-jerk reaction was a little bit lower there. But it needed to happen. The USDA was referencing some imports imports of soybean meal. And so what I'm thinking is that's from Argentina going to the Eastern Seaboard. So I don't see that happening in a much bigger, broader way than what we have seen. I think that 135 million bushel, I don't really see that old crop soybean carryover growing any further than that. And I think we did a lot of the work on bringing the July soybeans down before that report came out. So while we were knee-jerk reaction lower there, I don't know if it's something that report or that movement higher in the ending stocks from a 120 to 135, I don't think that keeps us under a tremendous amount of pressure. Those July soybeans are basically going to go wherever the November really wants, and that'll be based on weather. At some point, I think the July soybeans, if we continue with our weather concerns, we're going to want to carry as many of those bushels over into new crop as we possibly can, because we're going to need the beginning stocks. So I feel like any strength that we see going forward from weather is going to be felt in the July soybeans as well.
Well, Ted, I know a couple interesting headlines out there today, including Reuters saying President Biden looking at relaxing some biofuel blending rules. Got the weather, obviously, a lot of things out there. But what do you make of some of the headlines we saw and how they worked their way into the market trade today?
Yeah, so that's an interesting headline from Biden. And honestly, it kind of makes sense because the last time we talked about this was in 2012 when we had record high prices. And, you look at RINs, and RINs are record as well. And so they are feeling that. And when we are in times of shortage, that's when we should do things like this. But I honestly don't think it's going to happen. I don't think we're at that point yet. And I'm not so sure that your retailers really want to do that. I've been hearing some stories that one of the major Midwestern retailers is going to be converting all of their E10 pumps into E15, and that's at maybe 1,500 locations. That would be really fantastic for something like that to happen. So if they do ease restrictions, it'll be interesting to see whether that's taken advantage of or not. We've got the blend in ethanol at over 10% for the first time ever at 10.35%. You got to feel pretty excited about that. But then you hear this sort of news, and that kind of takes some of the wind out of the sails. So we'll see. I kind of think we're going to blend ethanol anyways. But yeah, RIN values are really, really very high. That's obviously caught their attention. The oil companies are obviously making a big stink about it. So we'll see what happens. Biden hasn't been as pro-oil as some of the other presidents that we've had in the recent history. I'd be kind of surprised if he actually went through with it. But yes, that is a concern for the market here today. And then weather, that's the big, 100-pound gorilla in the room. We had a system go through overnight that was maybe a little better than what the expectations were. I think it tracked a little further south into Nebraska. and then it made it into the western part of Iowa and southern Minnesota. And the question really is, when you get a system like that in an environment where we have this high pressure ridge, if that can get through, well, does that mean that this weather pattern is changing? And we're market's really on high alert for the idea that maybe the weather pattern changes sometime in the relatively near future. Usually, if we're going to see a shift in the weather pattern, it's going to happen here right in the middle of June, right? I think back to 2016. 2016, we put our highs in on, I think, June 9th. And we were sitting there looking at the 6 to 10 and 8 to 14 day forecasts that looked almost identical to what they were looking like yesterday afternoon, or what they looked like this morning. But then 5 days later, they got a lot wetter, and we dropped. We precipitously dropped in the market. And by the way, 2016, we ended up having one of the warmest and wettest finishes to the growing season. The July and August timeframe was really ideal, and we ended up with a record national average corn yield, which still stands to today. So, if you think about that and you think about 2016, you think, we have some areas that we've done some damage that probably won't be repaired. But as a whole, if weather were to get significantly better, we still stand to have some really very good crops. That is a possibility. So the market's very concerned about that. And on a Friday, in front of a weekend where we don't know what's going to happen with those weather forecasts and the market will be closed, you're going to get some profit taking. And that's generally, what we saw there on Friday. It's going to be very interesting to see what the weather forecasts look like Sunday night and Monday. That will be paramount for what we're going to do next week, because if they stay the same way as they look right now, which is for really not a whole lot of precipitation and a lot of heat in that 6 to 10 and 8 to 14 day outlooks, game is back on next week. But again, we're on high alert for that weather pattern change. If that's going to happen, now would be the time.
Well, Ted, if I'm a producer, I'm looking at my marketing plan. There's been a lot of talk from folks about, maybe some out of the money calls, some bull call spreads, things of that nature, just with all the volatility in this market, leaving the top side open if you're making any moves right now. Is that something you'd recommend? What are you recommending to your customers right now with a market this volatile?
Yeah, absolutely, Jesse. Synthetic puts has been the way to go. Right? That's what we've really been doing a lot of, and we've been doing that for a little over a year now. And what I mean by that is we're selling cash and then buying calls to recapture the upside potential. That way you have your floor locked in. You have your downside potential, or you have your downside risk managed by making those sales. But then we own the call to re-own the opportunity for things to go higher. And let's say, we continue with the hot and dry trend and yields are really suffering, and corn rallies to 750. Well, okay, you have something that's going to help you participate in that upside. But again, the key right now, a tremendous amount of risk to the downside if weather gets better. You have to do something to manage risk. Now, where we run into a little bit of a problem with that are the guys that are, say, up in western North Dakota or South Dakota that missed out on the big rains overnight, and now they're worried about whether they're going to have a crop or not. So we can't go too far on sales there. In that case, we have to maybe look at more traditional puts or other ways of hedging. But yeah, depending on where you are and what your location are, there are a number of different things that we can be doing with that.
Well, Ted, I appreciate the time. I know we're going to cut it short. I'm have a few technical issues, and you got a busy day as well. But I know we'll get you back on the program again soon. And where can folks reach you if they need a little advice from you at Zaner Ag Hedge?
Yeah, absolutely. You can reach me directly at 312-277-0113. You can also find us on the web at www.zaner, that's zaner.com. You can read a bit about us, and you can sign up for our morning newsletter. And if you want to open up an account, there's ways of doing that as well.
Ted, appreciate the time. Apologize about the technical difficulties. Thanks for a little insight on this Friday, and have a great weekend. We'll talk to you again soon.
Absolutely, Jesse. Thanks for having me on, man. It's always a pleasure. We'll be back soon.
And again, that's Ted Seifried with Zaner Ag Hedge. Follow him on Twitter at the Ted Spread. We appreciate him joining us for the program today. Again, a little bit of a shorter segment. We had some technical issues when we were getting the program together here this afternoon. So we do appreciate Ted joining us, and we'll get him back on the show again very soon. Always a lot of insight from Ted Seifried. Also, typically each midday, we have Arlan Suderman join us for some midday commentary here, and we release that as an audio-only program for Market Talk. And I wanted to share that with folks today. I thought Arlan had some good insight, as he always does, into what we were seeing on Friday's trade. Saw some of those headlines, the Reuters headline with Biden and biofuels, looking at some of the selling pressured profit-taking, weather concerns, and more. And we start with those headlines, and that's what I asked Arlan about, and here was his response.
Yeah, we started to go weaker this morning, really an overnight trade when rain started moving through the Dakotas with a target on Minnesota and Iowa and parts of Nebraska. And so that led to a little bit of pre-weekend selling, even though the longer-term forecast remains with a hot, dry bias. But we really accelerated to the downside when Reuters released that headline that the Biden administration is considering relief for refiners after being under pressure from those refiners as well as labor unions to do something to ease the requirements of biofuel laws. The Trump administration tried to do something similar and increase the number of waivers out there for blending. That was tried in court. Some of those had to be rolled back. Now the Biden administration is doing what it can. We don't know what they're going to do. It's hard to fathom that they could do something that would provide relief industry-wide that would just totally undermine or pull the legs out from underneath the industry. But when you're trading at these high prices and you have a lot of speculative money into the market that starts to get nervous at these levels, they start to sell off. And we saw soybean oil hit the daily limit lower, pulling soybeans down with it, corn going strongly lower as well. We're starting to see some significant end user buying come in on the price break. And so it'll be interesting to see where we close the day, but end users are still looking at this as a buying opportunity, helping to pull us off our lows at this hour.
One would have to think as well as we get through the weekend, we see the model runs for the weather forecasts on Sunday. I know forecast still trending hot and dry, but I know that's going to be a big focus no matter where we close today, Arlan.
It really is. As we look at the adjustments made by USDA that some of the traders didn't like of cutting crush for soybeans by 15 million bushels for the old crop, and some of the other adjustments made, those are all small compared to what the impact of the weather can be. Weather is still going to be the primary driver. Yes, there will be interest in what USDA does with acreage on June 30th and then yields on July 12th. But those yields are going to be tied to weather once again. And so that's going to be the primary driving force with a tight global corn and soybean balance sheet. It's going to be essential that the U.S. grow big crops this year. And there's some risk that it may not be able to do that and might even fall significantly short.
And briefly on livestock today, Arlan, cattle trading nicely higher, hogs a little more mixed, a little more to the downside. Any thoughts on the livestock market today?
USDA gave some support to the livestock industry yesterday by increasing pork exports by 125 million pounds for both this year and next year. Beef exports 125 million pounds higher this year, 75 million next year. So that's good on the demand side. But we're seeing the hog market pull back a little bit going into the weekend today on these cheaper feed prices and expectations that'll help expansion in the hog industry. But we're also seeing that the cattle market is mostly getting its strength in the feeder cattle on these cheaper feed prices. But when you look at the fat market is trading incredibly steady for the 8th week in a row right now because of packer capacity problems. So even though we're stronger today, we're really not expecting it to go anywhere for quite some time until we can deal with those issues.
Again, that's comments with Arlan Suderman of StoneX from our midday commentary. You can find that each weekday released as an audio-only update on all of our streaming sources. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now, Curt Blades with the Association of Equipment Manufacturers. Curt, great to have you back on the show. Thanks for joining us.
You bet. Thanks for having me on, Jesse.
Curt, let's take a look at those May equipment numbers and really continuing with strong growth according to the latest data. Let's look at the U.S. first and break down what we saw in those May numbers for us.
Well, as you say, we're continuing to see really strong numbers in tractor and combine sales in the United States. Really, kind of across all sectors, although we did see some decline in the smaller horsepower tractors. The under 40 horsepower tractors saw an 8% decline for the month of May, but you got to keep in perspective, we're still up 26% year to date in that particular sector. So that's still pretty solid news. We saw growth in chore tractors, 40 to 100 horsepower, about 6%, and a jump of 28% in the 100 plus horsepower tractors. So strength across the board on those. It's showing that shows an ultimate kind of a decline for the month because of that decline of that 40 horsepower, but we're still seeing 25% up for the entire year for all tractor classes. So I'll take that as solid number.
Definitely. And I think that just reflects, again, we talked about this last month, but more of the U.S. kind of coming out of the pandemic, the economy kind of, continuing to rebuild itself, so to speak. I think that's a testament to that, especially on the ag side.
Absolutely. And on the ag side, it's no mistake. We've seen some really great commodity prices. We've seen, a lot of those, storm clouds that have sort of stood in the way of farmers feeling optimistic about what the future is going to hold, starting to wane a little bit. China continues to want to buy our grain. That's a good thing. Livestock prices are doing pretty good. The, commodity prices look pretty good, and there's a good looking crop in the ground. Now, we've got some weather concerns that always happen about this time of year. But overall, there's a lot of optimism out there in the farmer community, and that's leading to them feeling comfortable making some capital investments. So we welcome that.
Curt, what about our friends to the north in Canada? Let's look at those numbers for the month of May. What do we see there?
Well, the Canadian numbers are much like the United States, still continuing to show a lot of strength. In fact, in some of the categories, even more strength. So, tractor and combine, tractor sales for Canada for the month of May are up 22% across the board, but for the year they're up 50%. So that's a pretty sizable number. Now, by comparison, Canada has been was a little bit slower to recover than the U.S. has been. So the U.S. has had this strong market for the last 12 months. The strong market in Canada has been about the last 8 months. So playing a little bit of catch up, but tell you what, Canada optimism is looking pretty good as well, and especially in that Western Canada where there's been some real concerns. I think there's some indications that perhaps the economy's turning around, the ag economy's turning around out there, and that was some much needed relief up in Canada.
For sure. And looking as well, Curt, here as we move forward, and I know the AEM, you guys look at a lot of data. Are there any sectors of the equipment side that you're looking for continued growth or more growth here as we get into the summer months and beyond?
Well, I'm really thrilled to see the strength in the ag numbers. The story for the last year has been the small horsepower tractors, under 40 horsepower tractors, and those are great numbers. And again, 26% year to date growth. That's fantastic. But I think we also got to recognize at some point you reach market saturation for that particular market. Plus, we do have some, well-documented supply issues among everything in the United States. It's just tough to get bicycles or cars or small tractors. And so, at some point, I don't see that necessarily dramatically affecting the sales, but it's factoring in, and I think it manifests itself a little bit stronger in that under 40 horsepower space. So as I look forward, I'm thrilled that the ag market is showing strength because that's where the growth is probably going to continue, and you're probably going to see some leveling out of that under 40 horsepower market for the foreseeable future. Not that it's not continues to be hot, it just may not be growing at the rate that it's been growing for the last few years.
You mentioned supply chain issues, and I know that's something we kind of keep in the back of our mind. And I mean, it's hard to get, like you mentioned, certain things around the world right now. Do you foresee that becoming a bigger problem in ag? Because it seems like outside of maybe, you mentioned a little bit with small tractors, but otherwise, I mean, it seems like ag hasn't been as hard hit as some other industries have right now.
Well, Jesse, it's universal. I mean, we're part of, ag is part of the global supply chain. So, as semiconductors, manifest themselves as a problem from everything to toasters and to automobiles, obviously it's going to affect us as an industry. I think there have been pockets that have done particularly that have been less affected, and there's some that have been more affected. The one thing that we've been trying to make sure we stay on top of, because of the time sensitive nature of agriculture, we want to make sure that we got those wear parts where they need to be. I mean, if you talk about priorities, obviously we want new equipment out there. We want everything to be supplied. But when given a priority, you want to make sure that those wear parts make it out there into farm country before planting happens. Because if the crop doesn't go in the ground, we got bigger problems. So that's number one. And then number two, answer to your question is like, what does it look like in the future? I think the best solution for our supply chain issues, frankly, is going to be a little bit of time. Calendar's just got to move forward a couple more months, because it's this this python that swallowed something big. It's just got to make it through the system for us to deal with some of these global supply chain issues. Now, dealing with the structure long term, obviously that's a different conversation. But the effect that we're going to see among your listeners and how it affects your ability to get cars, trucks, tractors, or pinball machines, that's just going to take a little while. There's no silver bullet other than just a little bit of time.
Curt, any other final thoughts you have for us on the May equipment numbers or anything else?
Well, I think we didn't talk on combines, which also continue to show some real strength. I mean, the bright shiny spark that's fun to talk about are tractors, but boy, combines are showing strength as well in the U.S. and in Canada. So when we talk again, let's talk about combine technology.
I think we'll have to do that. With that, Curt Blades with the Association of Equipment Manufacturers joining us to talk about the May equipment numbers. I appreciate the time, Curt. Thanks so much, and we'll talk to you again soon.
You bet. Thanks.
And again, that's Curt Blades with the Association of Equipment Manufacturers giving us an update on the May numbers here, joining us today on Market Talk. And that's going to do it for the program. We thank all of our guests, Curt Blades, Arlan Suderman, also Ted Seifried joining us here on the show today. You can find us online, markettalkag.com. This has been the Friday, June 11th show brought to you by Growmark FS. Again, find us on our website, markettalkag.com. I'm your host, Jesse Allen, wishing you and yours a great afternoon.